Thanks so much for joining us, Superintendent. I thought we would start off, at least from my experience as like a former regulator, one of the things I get asked a lot about is just like, what is the experience like? I think in getting notes from your staff, they talked about you overseeing $9 trillion worth of assets in the financial institutions that you oversee. Obviously, that includes a lot of the crypto businesses that are based in New York. But maybe we can just start off kind of with, over the past 2.5 years or so that you've been at the helm, kind of like what are the highlights? What have been the things you didn't expect? And kind of a little bit of a review of your time, maybe.
Yeah, absolutely. Well, thanks to the Blockchain Association, Kristen, Jason, all of you for attending. For those who don't know, DFS, as Jason said, we oversee about $9 trillion in assets. We regulate insurance, life, health, property and casualty. We regulate several hundred banks, including 15 GSIBs, about 120 foreign banks. We're the only prudential regulator in the country of crypto with crypto-specific authorities. We oversee debt collectors, student lenders, mortgage servicing. So you name it in the financial services space, we oversee it to the tune of $9 trillion in about 3,000 organizations. The other great thing about DFS is that because it's a state regulator, we deal with really hyper-local issues, things that are very particular to New York. But because it's the financial capital of the world and we regulate so many foreign institutions, it really is a global regulator. So as much time as I spend in little towns in upstate in New York, I spend a lot of time in the UAE and all over Western Europe and in Asia because of the foreign institutions that we regulate and because New York is what it is. So it's really a great institution when you're regulating financial services because of the breadth and depth that we have. I think there's been lots of surprises in 2.5 years. Crypto winter and bank failures, to name a couple, so lots of new gray hair to go along with the job. But when I came in, DFS historically has always been led by a prosecutor. It is, a famous enforcer. I really changed the culture. I think enforcement is important, but you shouldn't be regulating by enforcement. We have a whole suite of tools, all of which we bring to bear on our crypto regulated entities, from rule writing to examination to supervision and, when needed, enforcement. So I have been much more focused on the other tools in our tool belt so that we're providing transparency to our regulated entities across the board. We're much more engaged in rule writing, in guidances. And then when we do enforcement, it's much more focused on kitchen table issues. So rather than looking for big penalties, although of course we've brought lots of cases with big penalties, I look much more for restitution. And that means in the 2 years and change that I've been at the helm, between complaints and enforcement actions, we've gotten about $277 million back to New Yorkers in their pockets in the form of restitution. So that to me is much more important than just having big fines, because it means that New Yorkers understand what their government is doing for them. And when financial services don't live up to the experience that consumers expect and deserve, there's somebody there to make sure that there's restitution for that. The last thing I'll say is it's really an organization where we've been very focused on process, and that includes in the crypto space. It's great to have rules on the books, but you have to operationalize them and run a department well so that they're meaningful for the industry that you're regulating.
Yeah, and so maybe like what I take away from what you're saying is you take this very holistic, comprehensive approach to thinking about regulation of the entities you oversee. I think, at least from my own interpretation, New York has kind of been at the forefront in the US in terms of trying to build that out specifically for the crypto ecosystem. Obviously, we spend a lot of time in this room talking about federal dynamics and who should regulate and whatnot, where, again, my impression is you guys have been spending a lot of the time actually doing that. I guess one question is kind of what prompted your desire to kind of focus on this industry and build out that infrastructure? And maybe like what are some of the things that you've learned and prioritized as part of that process?
Yeah, I think for me, I knew there was this gap. While I think we are very eager for there to be a federal partner, in regulating the space. I knew, as I said, we're the only prudential regulator in the country, state or federal, with crypto-specific authority. And I take that very seriously, which means, you know, you can look at the rate at which the industry is moving and changing, some of the risks that are presented. So I took very seriously the responsibility of making sure that gap is filled, at least for New York, in a very positive way. So what we've done in the 2 years since I've been there is we've grown the team considerably. I think there was maybe a handful of people in the crypto unit when I arrived. Now we're over 60 people. It's the largest crypto unit, I think, probably anywhere in the world. Somebody made the comment earlier that maybe my crypto unit of 60 plus people is larger than all the other crypto units of regulators combined in the country. So having that expertise is important, and we've got a really diverse set of folks, people from industry, pure technologists, people that have come from other regulators. So it really is a great group, and then those people are responsible for rule writing and guidance writing and supervision and examination, and then they work very well with our enforcement team. I think the other thing is, you know, the rules were on the books when I came in. New York has had the BIT license regime in place since 2015, but it hadn't been operationalized particularly well. It was sort of, New York had become famous for the license taking years and years and years to get for no apparent reason. There wasn't a lot of transparency as to how or why decisions were made. So we've done a lot of work. We've now written 8 pieces of regulatory guidance, stablecoin guidance, market manipulation guidance, blockchain analytics guidance, to add some clarity to the regulation. We have monthly meetings with most of our regulated entities. We have material change of business requirements. So the application process remains incredibly robust and still very time-consuming, but I think now applicants and regulated entities understand the why, they understand the path to the end, and they have a much better relationship with the team and understanding how their application is progressing, and then once they're licensed, what it means to be supervised and examined by the department. Again, after a company meets our rigorous application standards, each one has a tailored, bespoke supervisory agreement that's meant to meet the particular risks that a business model, a particular protocol, a set of products might meet. So it is it's a very, I'd say, not only robust, but it is a framework that can only be created by a group of people that has tremendous expertise in the space, and I think we're proving that every day.
Yeah, and I want to get to the substance of some of the policies that you talked about. Maybe just one more process question. I mean, as a former regulator, I can't imagine having 60 people focused on crypto like at the CFTC when I was there. Like, that would have been pretty helpful. But on that front, do you see that growing? Do you see, like, what are the trends in terms of how you're building out that team, where the focus is? Like, how much of this industry do you think is driving a much bigger investment, or do you feel like you're in a good place right now and this is what it's going to look like going forward? Well,
you know, you'll never find a regulator that says they have enough resources, sure. Right? We will always say we need and want more resources, and so we'll continue to grow the team, make sure we have the expertise that we need as this space, because it moves so quickly. And I think that's another virtue of being a state regulator, is we're able to move much more quickly than the federal regulator. So if we see a risk emerging in the entities that we regulate in the space, as we're talking to our partners around the globe, we can move quickly to write that piece of guidance, to take the action we need to take. We were the first regulator to take any action vis-a-vis Binance over a year ago, when we asked demanded one of our regulated entities to stop minting BUSD, and oversaw the orderly wind down of that minting process for BUSD. You know, so it's nice that others are taking action there as well. But I think that it really demonstrates it as a state regulator how quickly you can move. So we will continue to build. We'll continue to put out pieces of guidance. We just did revised coin listing guidance a few weeks ago. So
yeah, I kind of wanted to go there. So as you mentioned, you guys put out guidance recently around how regulated platforms are able to list assets. I think there's a few elements, at least as I read it. You know, one is about creating processes within these entities so that they can self-certify which assets go on their platform. But then there's also dynamics around getting pre-approval for things like new stable coins, and kind of associated with that is the green list of assets that like were kind of by default allowed on platforms got a lot smaller. Maybe you start at the high level, like what prompted the new guidance on that front? What were you trying to accomplish? What are you trying to see changed in some of these entities?
Yeah, I mean, I think it goes back to the difference of having rules on the books and having rules on the books and being able to operationalize them, right? When you have a small team with not much expertise, you might have rules on the books, and that's better than nothing. But of course, then I came in and built out the team with real expertise, and we were looking at the existing regulatory assets that we had, including the coin listing guidance and the self-certification process that we inherited, and said, this just doesn't meet the risks that we see in the space. So although they were rigorous requirements, we saw, I think, two things. One, that our regulated entities weren't really living up to those. And two, that they weren't sufficiently rigorous for the risk we were seeing in the space. So it sort of goes, it's sort of the old adage, when you know better, you do better. And so for us, it meant rewriting those rules so that our companies have to have more robust policies and procedures in place internally if they want to be able to self-certify coins or tokens to list. And then we will, because we now have this team of experts, be able to examine much more closely to make sure that they are meeting those standards if they, in fact, want to have the ability and the privilege to self-certify. The other thing we added that didn't exist before was a delisting requirement, and I think this came out of our experience with the wind down of BUSD for New York, is that if you're going to cease listing a coin for business reasons, for regulatory reasons, whatever it is the company decides, you need to be able to do so in a way that doesn't create market disruption or harm to a consumer, and that requires having a process in place. How are you going to decide which coins to list or delist? Once you decide to delist something, how do you do that in a safe and sound manner? So we are now requiring each of our regulated entities to have that process laid out, and both the listing and the delisting processes have to be approved by DFS before one of our companies can self-certify. And then, as you mentioned, right, the green list got smaller. I think it was our view coming in now with this team of experts that we've built that you only want green listed those tokens that you feel pass the muster of our BSA, our cybersecurity, our other standards. And so we wanted to make sure that that list reflected our standards. Again, going back to when you know better, you do better. The list that we inherited, we just thought presented too much risk, didn't live up to the standards that were on our books, and so we needed to make that change.
Yeah, I probably could spend the next 15 minutes just asking more specific questions. Maybe one is kind of like your vision. There's plenty of companies, I think, in the audience who probably have some tagline of like millions of tokens, right? Like everything is going to be tokenized. There's going to be a future for that. Do you, like, is your vision that there are probably only going to be like a small number of tokens that meet these very high standards that are going to be trading in New York? Or do you think you have a process that's going to kind of grow a much larger token environment in your mind?
Yeah, I mean, so we don't prejudge these things. You know, my hope is that as the industry matures and evolves, more and more companies and more assets, right, meet the standards that we've set. And I think one of the many virtues of setting high standards is, even though those standards only apply to New York, it's not as if you have a robust cybersecurity protocol to meet New York standards, you don't have a cybersecurity protocol for New York, and then you operate your cybersecurity differently in New Jersey and Connecticut and the UK, right? So it creates the high watermark, and it lifts the compliance standards across the board. So if you want to do business in New York, if you want to offer certain coins and tokens to New Yorkers, it means your entire compliance apparatus has to level up. And that's a good thing for everybody. So even though our rules clearly only apply within our geographic borders, it is a good thing for the company and for the ecosystem overall.
Maybe can you speak to that dynamic a little bit, which is clearly, I think New York as I mentioned earlier, is probably a leader. There's also an element of like New York's a huge economy where most businesses are going to be operating. But how do you view kind of your role vis-a-vis the other states, right? As like, do you see yourself as a passport? If you can meet, you know, New York's standards, that would be great if that was implemented elsewhere. I know you mentioned earlier you'd love a like federal partner. I'd be interested in like what your discussions are like with the states, how you view that environment of like exporting your regulatory regime more broadly.
Well, it's interesting because when I came into DFS, it very much had this reputation of being a lone wolf among the states and vis-a-vis federal and international partners. And I thought that was really important to change, right? Financial services is borderless, so nobody can really act alone. So I took the time, I met with every one of my state counterparts on both the banking and insurance side, because having them together in one regulator is pretty rare on the state level. So I met with every one of my state banking colleagues and every one of my state insurance regulatory colleagues one-on-one. It was a lot of meetings, but I felt like that was important to do. I'm the state banking representative for FSOC, so I now sit on the FSOC as of last January, and I was elected to that post by the 49 other states. You would think that'd be natural for New York to have, but New York had actually never held the seat before. And my biggest sort of ally and sponsor in taking that seat was actually the Texas banking commissioner, right? So I think it speaks to the way we now do business, that, you know, doesn't care about ideology and politics and being the lone wolf, right? You can't be a leader if you don't have any followers. So it's now a much more collaborative place. So we work very closely with our state counterparts. The new framework in Illinois is based on what we've done in New York. The new framework in California is heavily based on what we've done in New York. We spent a lot of time with the California legislature as they were developing that bill. We spend a lot of time, you know, with the federal regulators and with Congress, talking about the success of our framework, really walking them through how we've operationalized it. Chairman McHenry has said publicly, right, the stablecoin bill that the committee passed not that long ago is based on the New York framework. So that's really important because we do want to bring people along. I think when it comes to passporting, what we hear from a lot of folks, especially I would say in Europe, is that they know if it passed New York standards, it will pass their standards. So it's sort of become the good housekeeping seal of approval. And so we do a lot of work, especially with the European regulators, on joint supervision. We're working on more and more passporting and reciprocity regimes to make that easier for our regulated entities, but also so that as supervisors, we all have a good view of the whole of an entity rather than just our individual pieces. And I think that's when it's good when you make things easier to comply with, but it's also good when you give regulators a better view of the risk. So it's really a win-win.
Yeah, maybe on the federal part. I mean, so obviously we're here in DC. A lot of the discussion is around the legislative process. You know, you mentioned the stablecoin bill. I mean, like, it's the Capitol up there on the logo. It's, you know, you've obviously testified in front of Congress on the topic of federal legislation. Maybe just like, what are your views on that process? What are you hoping gets accomplished out of that process? And where does like New York fit in that mix?
Yeah, and I think for us, you know, my goal is always to be the honest broker, right? To me, nothing we do at DFS is partisan. It's not about sort of choosing sides. It's just, what is our experience? What do we think is the best policy? What do we want to see for the nation? And so we have spent a lot of time, you know, with representatives and senators on both sides of the aisle, from New York, from outside of New York, just talking about what works in our framework, what areas we want to improve in our framework, what we think is required for robust supervision of the space. So again, I am hopeful and optimistic that we will have a federal partner. For us, it's important that it really is a partner, though, and that there isn't preemption, because New York has done so much good work in the space since 2015. We know so much. We've got this large team of experts, right? We We didn't license FTX to do business in New York. We were the first to take any action with respect to Binance, right? Our companies, our regulated entities fared very well through the crypto winter because we have such robust capitalization standards. We don't allow rehypothecation, all these other things. So it would be a shame to lose that knowledge and that work that New York has done and the nimbleness that we have to address risk quickly. But that said, right, this is a sort of a borderless space. And so for us to have a federal partner that is also supervising the industry, I think is incredibly important for us in New York, for the US, and so that this space can evolve in a mature way and continue to be an important part of the financial services ecosystem.
Yeah, like a funny story from my perspective on that would, Congress would call us at the CFTC and ask like, hey, can we get your thoughts on preemption? And we would have a discussion. And I remember one time I was talking to the Alabama securities regulator, and he was like, so are you saying you want to come in and like regulate the Bitcoin ATMs in Mobile and Tuscaloosa? And I was like, oh, maybe that's a little trickier question, right? But in terms of, there's a lot of talk about like the prospects of those legislation. One of the things that Chairman McHenry said last night was that his hope is, a good stablecoin bill can pass, but if it's not going to be a good one, he would prefer the default position, because the default position is that the states will lean in more and do more around stablecoin structure. Is that how you view it? Is that like, depending on what happens at these federal levels, whether you're going to rush more into that area, or I don't know, how does that dynamic work for you?
No, I think for us, we will continue doing what we do. I mean, we have a very robust framework in place, and it covers crypto and it covers stablecoin. I mean, we did stablecoin guidance over a year ago where we require one-to-one reserving, right? There's got to be $1 in cash and cash equivalents reserved for every stablecoin issue. We require T+2 redemption, right? All of these things that you now see in this bill. So we are going to continue marching down the field, continue improving, continue to remain nimble and address risks that we see them. But again, very much want a federal prudential partner at the table to also be overseeing the space. So anything that Congress asks us to do to be helpful in that, we will do. And at the same time, we will continue our work regulating the space for the benefit of New Yorkers and to continue to gather that expertise and knowledge.
I'm going to pivot to just like one other policy area. I saw that the DFS have put out new guidance more broadly related to cybersecurity. I think it's, from this industry's perspective, there's a very unique cybersecurity element that goes on, right? Where the failures in a system lead to the actual assets being drained out, and we've seen that in quite a few circumstances. Do you think about like application of cybersecurity differently in this industry, and how does that like then show up in terms of how your office is dealing with kind of like what you expect from a cybersecurity perspective?
Yeah, so we just revised our cybersecurity regulation. We had cybersecurity regulation on the books since 2017, and it had really become the model for other states and indeed for some of the federal regulators as well. But 6 years in cybersecurity land might as well be 100 years. So many things change, so it was really time to update that regulation. So we've done a number of things there. One, we've sort of updated the tailoring. Because we regulate so many different types of companies and different sizes, everything from the 15 GSIBs to 5-person insurance brokerage shops. It was really important that we had tailoring right in that rule so that we weren't overburdening our very small companies with things that they just weren't going to be able to accomplish. So that's one thing you see in there. There's a lot more focus on corporate governance. There are small things too. Now we require multi-factor authentication across the board. 6 years ago, that might have been really hard for the smaller companies. Today, there's MFA applications that you can get for free, so it was time to make that applicable across the board to all of our regulated entities. So those are some of the changes you see in the revised reg that we've just finalized. But we are then able to take into account the specific risks we see in crypto. The same cybersecurity standards that apply to our banks apply to our crypto companies. The same BSA standards that apply to our banks apply to our crypto companies. And we were able to write this rule taking into account the knowledge and experience we have from supervising the crypto space now for nearly a decade. And so it's important that we were able to weave that in. I will say, I think the two areas where the crypto or the digital asset space continues to falter the most are around illicit finance and cybersecurity. That's where we see the compliance apparatus really be its most immature, and where we continue to work with companies through supervision, through our exams, and through enforcement to make sure that those areas get up to snuff very quickly.
Yeah, I had like one kind of easy wrap-up question, but maybe just real quick on that point of the illicit finance part, because we talked about the cybersecurity. Like, what are the nature of the problems that you're seeing in that, and like, what do you think needs to be improved there specifically? Yeah,
I mean, the problems are we see a lot of problems with KYC and robust onboarding, due diligence. And then we see a lot of problems with transaction monitoring. And it's just an immaturity in the compliance apparatus. So I think it's hard, especially if you're maybe a venture-backed business. The business scales very quickly, the compliance apparatus scales more slowly. And it just doesn't work in an industry and in a space with these types of risks. So my counsel to companies is always the compliance apparatus has to scale along with the business. And I think the other thing that's surprising is, we have people come in there like, well, we're a technology company and, we can do this super well. And then when we end up doing investigations on the enforcement side, we go in and we see reams of paper for illicit finance stuff and for SARS filing, and it's like, wait, you're the technology company. Why are there stacks of paper and backlogs, right? This should be something that you all can do well, and our expectation is that the space start to do it much better, and we will continue to examine and enforce where necessary until that's the case.
Yeah, I think that's a great point in terms of I remember one of the startups I worked with early on, it was like, hey, if you guys are successful in what you do, you're gonna have a huge compliance office eventually, right? And having that thought early on, I think has probably been a learning process. But maybe I'll end with just generally you looking forward a little bit in terms of like, what do you see for this industry? What do you see for New York vis-a-vis this industry? Are you kind of in a place now where you're comfortable, or do you see this, like kind of project ahead a little bit for us?
Yeah, regulators are never comfortable. We're by nature sort of nervous people. But, I am optimistic, one, that we will have federal legislation and a federal partner, two, that this industry will mature, and that we'll see more and more companies that have that compliance mindset from the get-go, and that they continue to mature with respect to illicit finance, cybersecurity, and then as we think about the overlay of AI, of course, and what that's going to mean for this space, that people approach it with that compliance mindset. I think it's something we're spending a lot of time sort of socializing our regulated entities to and working on, and as a regulator continuing to think about those risks and how we provide transparent, robust rules of the road for the industry.
Thank you so much. This is great. For those folks in the office or the audience who are thinking of like, what does regulation look like? Like, I hope you understand, like, this is the reality of regulation, right? And so leaning into this going forward will be probably pretty important. So thank you so much for your time and your insights.
Thanks for having me. Thanks, everyone.